Hey guys, good morning, everybody. Welcome back. Today is Wednesday, May 4th. It is 8:34 right now. So I'm going to go ahead and set up this room real quick, then we'll get started for our mentoring session for today. All right, looks good for the most part. Let's get everything right here set up. Looks like we're good to go. All right, looks good. Let me send this link out to you guys here in the premium. And then should be good to go. All right. It's good, guys. I'll give it a few minutes for people to make their way in. Out of a nice snipe right there. Sorry, now let's see. Actually, no snipes right there. All right, cool. We got a few minutes for people to make their way in. I've got, let's see, I've got a couple questions here already lined up, so I'll probably go over those first, and then we'll continue on. So let's see, we got. Hey Nick, how's it going? How you holding up? Hopefully you're doing all right, man. I know it sucks. And he said, I feel like such a rookie right now. I know it sucks, but it is what it is. You just got to shake it off, move on with it. Hey, Sam, how's it going? Hey, Rick. Nice. Rick said he got 100 pips on that drop. I saw the V3. Well, I mean, technically not a V3 because there was no pending signal there, but there was a V3 that was over here earlier that I think hit. Wish I caught it. I think Biden is speaking right now, right? So I'd be careful if you guys are trading because from what I heard, Biden is speaking. So, oh, he's done already. Thanks, Peter, for confirming that. Peter said he ran off already. Tried to shake some invisible hands and ran off. See, I just want to clean up the chart a little bit here. I'll leave up majority of the stuff because I think some of the stuff will still be relevant. I'm just going to remove the like these vertical lines just so that it's not so messy, and probably the liquidity that's been trigger rate as well. So I'm going to just clean this up a bit right here. All right, so we do have the Fed speaking in a couple hours. I'll try to look to see if I see any trades here. I mean, if I do, maybe I'll take something, but for the most part, I'm going to be pretty smart about my moves here, not take anything dumb and throw away my profits from this morning. So, all right, looks like majority of people are here so far. Let's see. Lila's asking, hi everyone, is there a difference between the trend and bias? So your question, I mean, it depends on what your question is, Lila. I think you might have the concepts mixed up because the trend falls under technical bias. I don't know if you're talking about, because you just asked like if it's different between bias. You know, there's a retail sentiment bias, there's a fundamental bias and a technical bias. If you're talking about technicals, then it aligns with technicals, but it does not align with fundamentals or retail sentiment. So it just depends on, you know, on what you're referring to. But all right, guys, looks like a good amount of you guys are here already. So I'm gonna start off, I'm gonna go over the first question. So these are the questions that were asked prior to the mentoring session. Basically, Solo wants me to go over bias and fundamentals, when to take trades, when not to. Craig is asking how far do the sessions go back using the K2 sessions indicator. And then lastly, we have Purity, who wants me to discuss retail sentiment, fundamental bias, technical bias, and how to mark up the sessions, mark up the chart for sessions and news. I don't think Purity is here yet, but it's going to go hand in hand with like what Solo asked, because he wants me to go over the bias and fundamentals. So Purity, I know you're not here yet, but when you do watch this replay, it's going to align with your question there. So let's get started. If you guys have any other questions, feel free to put your questions in the chat, in the Zoom chat. I'm going to be answering all the questions in chronological order, so that the earlier you guys ask your question, the earlier your questions will get answered, and they're all going to be answered in order. So, all right, let's start off with the first question. Solo is asking to go over bias and fundamentals. So basically, I'll put the requirements here for the bias confluences. So basically, right here, these are going to be ranked in order from most important to least important. The most important bias confluence would be the retail sentiment. So in order to identify the retail sentiment, we'll look at the IG sentiment over here, and we're going to confirm where the retail traders are trading. So this number right here, net long, is going to indicate what the percentage of retail traders are buying. Vice versa, this net short over here is going to indicate the percentage of retail traders who are selling. So in order to confirm the retail sentiment, you basically want it to be 60% or more in one direction or the other. Once you have that, you will trade opposite of everyone else. So for example, right here, it shows that 60% of retail traders are on the long side, right? So if everyone's trading long, you want to do the opposite. You want to trade short. So with that said, we have a bearish bias with regard to retail sentiment, because we don't want to trade where everyone else is trading, right? You know, if you're taking longs here, it's been 60% all morning. If you took longs all morning here, you would have blown your account, right? How many times? Because we do the opposite of everybody else. If everyone's buying, we're going to sell. And we're not going to caught in these traps here. So that's the first step, retail sentiment. The second step is going to be fundamental bias. To do that, we'll look at CNBC over here. I've given you guys a link. So I will be updating the videos later, and I'll be explaining this again in detail at some point. But basically right here, I'll refresh this. In order for you to have a strong fundamental bias, you want this number here to either be negative 100 or positive 100. So either 100 in red or 100 in green. And you want it to be consistently below that number or above that number. The reason for that is because you want to confirm that the fundamentals are very bullish or very bearish, right? So for the second requirement here, you want to confirm that one of the other is happening. You don't want it to be right in the middle. Like for example, right here, it's at 64 points. It's not negative 100 or more. So in this situation, you don't know where price is going, right? Price is going back and forth. It's not just dumping. It's pretty much going back and forth and sideways. So that's how you would confirm the fundamental bias. Right now, we have a sell bias, but it's not a strong sell bias because it's not under 100 points. The only reason we have a sell bias is because it's red. This aligns with the retail sentiment. So with that said, we're probably going to be looking for sells if we're looking for any entries at this specific moment. Going back over here, that's pretty much it for retail sentiment. That's it for fundamental bias. The third requirement here, technical bias, would be identifying the direction of the trend per se. So basically back to what Lilo is saying, you know, you can use different tools here. If you want to do it manually and you just want to, you know, you want to be a cool guy and you want to draw your own trend lines, jokingly, guys, I'm being sarcastic. If you want to draw your trend lines and you want to do it the hard way, which by all means do, you know, take as much effort as you guys want. I don't want to take that much effort. I want to do as little work as possible to identify what the technical bias is here, right? If you want to draw the trend line like that, go ahead and do it. This will identify that it's in a downtrend. For me, we have indicators for that, so we don't have to do all this work. So for me personally, I'll use the K2 pivots. If price is below the pivots and the pivots are spread out, this is going to indicate that we are in a sell bias, right? In a downtrend. So instead of me having to draw my trend lines right there, which there's no problem with doing that. It's more work. Why would I do that when I can just look at the chart? So you can do that if you want to. I look at the pivots. If it's below the pivots, it's in a downtrend. If the trend meter is red, it's in a downtrend, right? You can use either or, you can use both. You can use all three if you want. If you have all three, this will help you have a better understanding as to like where price is going. But realistically, I mean, the technical bias is the weakest of all the confluences. So it doesn't really, I don't really look at the technical bias ever, really. I really look at retail sentiment and fundamentals because I'm looking for where the move is going, long term. Like for example, right here, if you're looking at the technical bias and you're drawing this as a small little uptrend, you'd be wrong, right? Because obviously price is coming down. It's just temporarily going up. So that's pretty much it for the biases right here. I mean, you look at retail sentiment, you want all of these to line up. If all of these line up here, this will provide, this will provide your greatest confluence because you have all of them lined up. So if you have that, you'll be really confident with taking the trade versus just having one or the other. So follow up to Solo's question here. So Solo's asking, what happens, however, if retail sentiment is over 60 and fundamentals are opposite? Well, if that's the case, there's no confluence, right, Solo? I feel like a lot of people try to make, this is like, they go over their head, right? If these don't line up, then there's no entry available. And not just you, Solo, I get this question from other people too, but I feel like a lot of people, they overcomplicate something that's extremely simple, right? If these line up, then there's a trade. If it doesn't line up, there's no trade. That's the requirement here, right? If you're taking any trade here, and I feel like this, like I just said, like for every variation strategy, confirm trading the direction of the bias. If there's no bias here, then there's no trade because you don't have the first requirement. So if you can't pass the first requirement, you don't take any of the other requirements because you can't even get past the first level. So going further with Solo's question here, Solo said, and if the fundamentals are not strong enough and retail sentiment is not strong enough, then there's no trade, right? I don't know how much more simple to put it for you guys. Like I give you guys these rules here for a specific reason, right? If the rules are met, there's a trade. If the rules aren't met, there's no trade. The problem with a lot of people, not just you, Solo, and I'm not trying to like, zone in on you specifically, but I get this from a lot of people. Everyone's looking for a shortcut, right? There's a reason why I'm consistent and those people aren't, right? There's a reason why I win almost every trade. And there's a reason why other people don't win, half the amount of trades I trade because they're skipping steps. So short answer to your question, Solo, is there's no trade available, right? If the bias isn't confirmed, you can't confirm the bias, which is not going to confirm the first requirement. It doesn't matter if you're applying the V1. The V1, what's the first requirement? Confirm overall bias. The V2, what's the first requirement? Confirm overall bias, right? The V3, confirm overall bias. So if you guys don't confirm the overall bias, there's no trade there. So going back to your other question that we discussed, you're basically asking when to take trades and when not to. When the bias isn't met, you don't take the trade. When the bias is met, you take the trade. So does that like kind of help? So I kind of want to make sure that you get this because I know that you're like one of the members who are actually experienced in trading. So I want to make sure that you're definitely getting it. Because I can get this from like more beginner traders and it makes sense because you guys just don't get it. But when the more experienced traders ask questions like this, it kind of scares me a bit because I'm like, like where's the confusion here? So does this make sense for you? I just want to make sure because I want to make sure if you're confused with this, then there's obviously something wrong with it with this requirement here, right? And that's something that I would want to change. So yeah, so if you could confirm if you get it or not, you could let me know. The thing is, just like I was saying, people take shortcuts. If the bias isn't there, there's still a trade available. It's just not it's not a high quality trade, right? I only take high quality trades. So, I mean, I always try to remind you guys, it's up to your own preference. If you guys have the risk appetite to take risky trades, then, then you can skip steps, right? But when you lose the trade, you have to understand that you made that mistake and you lost the trade because you didn't follow the steps, right? I just want to make sure that people are getting that, because you guys could trade like however you guys want, right? Like the K2 strategies here and my concepts, this is just foundation for you guys. Like you guys can learn what I'm teaching you guys and trade how I'm trading. But this doesn't necessarily fit everyone's trading style, right? Like not everyone wants to be as careful as me. So if you guys want to take more risk, feel free to drop whatever requirements you think are like not as important, because you guys will see here sometimes that you'll have entries. Like for example, right here, let me just go, this is like a clear example and it just happened real time. So right here, there's a V3, right? There's a V3, but the first requirement isn't met because obviously our bias here is for a sell. But if you were to catch this V3 right here, it still would have hit your TP, right? So that's what I'm just trying to get across to you guys. You guys can trade however you like. If you guys ask me the question of what I would do and what the steps are pretty clear here. Like if the steps aren't met, there's no entry here. But you can skip steps like, what a lot of people do, and you can still win the trades because the strategies that I create for you guys, when I first create these strategies, they didn't have these other requirements. Like we didn't have bias requirement. We didn't have pending signal. We didn't have a lot of these things. We didn't have max, because what I do is I start the strategy from a bare bones standpoint, right? I start the strategy from looking at it from this perspective. Like initially, this would be like what the strategy would look like. You could take it either direction. However, I don't like losing trades and I like having a very high win rate. So for me, I start to add more requirements here to increase the win rate and probability of winning, right? Trading is a game of probability and trade psychology. Realistically, if you have a high probability strategy and you're able to apply perfect or near perfect trade psychology, you guys will like almost never lose, right? You guys will trade exactly how I do. So, just a reminder, like the K2 strategies are just the guideline for you guys. They're just foundation. If you guys want to make changes to it, feel free. But if you guys do lose trades, you guys have to understand that you guys did skip steps in, making that process. So other than that, let's see, Solo said, yeah, bro, to be honest, I haven't been trading with that rule. Just a few trades that were taken did not meet and got confused. Yeah, no, exactly. And that's perfectly fine. So you're a more experienced trader compared to like other people in the group. So like you can take trades off instinct, right? Like you have the requirements here and you can skip like the first step because you already know, okay, the strategy works perfectly fine. And you probably see a reversal coming, so you can just apply it there. So for you specifically, if it's just me and you talking, then you can do that. You can skip a step. For a beginner trader, I want everyone to follow the steps exactly, because if you follow the steps exactly, you'll almost never lose a trade, because I've refined every strategy here as much as I could, right? I've refined it enough where there's still entries, but if you wait for those perfect entries, you like basically will almost never lose. So that's what I'm trying to get across to you guys, because like for a lot of new traders, you need that confidence to get better. It's just you need to have a couple wins under your belt, and then you can have the confidence to take shortcuts if you really wanted to. Yeah, no problem, Solo. So glad I can answer that question for you. And that was a good question, actually, because I'm sure a lot of people have that question there, but a lot of people are scared to ask it. So thanks, Solo, for giving that question out. Other than that, let's see, JJ over here. Sean, bro, I was down 3,400 today. I'm in 1,100 profit. I'm done. Don't want to get greedy. Yeah, you should probably just take it easy, JJ, because we do have the Fed speaking in a couple hours. I'm still looking for some possible entries here too up myself, but I'm probably just going to sit it out. I don't want to risk it, especially with the whole TFF thing going on. Man, I don't know. It's a mess. Charles asking, isn't Biden speaking? He was speaking. I think he's done now. Peter confirmed earlier that he was done speaking. So I think he's done at the moment. So let's see the next question over here, or I'm going to delete this right here. Solo. So we're done with Solo's question. We're going into Craig's question now. And Purity, I did see that you joined the group late. If you want to go in and review the live session later, Purity, you can. We did answer your question aligned with Solo's question. So I know you entered a bit late, about like 20 minutes late. So if you want to go back and watch it, you can watch it like a little later. If you want me to review it again at the end, if we have some time, I can do a quick review. But we went pretty much in detail with regard to your initial questions regarding retail sentiment, fundamental bias, and technical bias. I'm gonna add another question to the list over here from Pat. So Pat's asking, do you ever use sessions? Do you ever use sessions as a zone? So no, I'm not, I was gonna type it up, but I think I could just answer your question directly, Patrick. So Pat is asking, Sean, do you ever use sessions as a zone for the 10-minute snipe? So I have never used it myself. I mean, if you've tested it and it works, then I mean, I would continue testing it. The thing is, the snipe strategy was created a long time ago. We created that like 2 years ago. So that was like 2 years before the session was even created. So I haven't had the opportunity to go back and actually, you know, check it out to see if it works well. I mean, if you find it to work well, then, you know, maybe you can use it. But I mean, I personally have no idea because I haven't looked at it myself. I don't even see any examples here because the problem is the sessions are always going to be kind of far from the zones. So you're not really going to get, I mean, the sessions are far from, okay, so for example, right here, or actually this isn't even a good example. If it was a sell, it'd be good. Okay, so right here, actually. So here's the one example to your question right there, Patrick. No, never mind. It's not there anymore. Because the sessions, so here's the problem. If you're trading the sessions and you're on the 10-minute, you got to keep in mind that these sessions change by the session, right? So like say like previously London session overlaps with New York, right? So if you ever looked at the chart here, and I'm not sure if any of you guys really noticed this, but if you guys look at the chart from like 6, so like our live session over here, you guys can see where the London high is, right? Let me just turn these off. The thing with the London high and the London low is that it overlaps with the US session. So this is the previous session, like from the day before. It doesn't update until the next day starts. So if you move this forward, you'll see that the London, okay, so you see right there where it changed? It's from this point, and then a little later, it'll move forward. Not that candle, maybe the next one. And it changes, right? Because this goes to the previous session. It's really hard to use a session for the 10-minute because these are 10-minute candles. There's only so many hours in each session. So if you go over X amount of candles, the sessions are going to change. Like for example, it's New York session, right? If the New York session switches over to tomorrow, then it's going to change again. So, or once the session is done, which is like at like 1 o'clock our time or Pacific. So I don't think it'd be a good thing to use. I mean, if you want to test it out, Pat, feel free, but I don't think it's going to be very useful because it changes by the day. Yeah, no problem, Pat. Glad I could answer that question for you. And that's a good question. I've never gotten that question before. So I'm sure someone else had that same exact question. They're just like, you know, too scared to ask it. But yeah, thanks for asking that question too, Patrick, or Pat, sorry. Other than that, let's see. Peter said Biden is still speaking. Oh, so Biden is still speaking, but this is something else. It's not the same thing he was discussing earlier. This is regarding the Team USA at the White House. So he's not talking politics, but he's still talking, which I don't know, he might blurb something out that will affect the market, which I wouldn't be surprised. Like I wouldn't put it past him. But all right, so that's it with that question right there. So the next question over here is from Craig is asking, oh, and this goes back to what I just discussed. So Craig's asking, how far did the sessions go using the K2 indicator? So with the K2 indicator, they go back to the previous session. So just like I discussed over here on the 10-minute, I'll try to go over here on the 1, or it was easier to see here on the 10 actually, with it changing, right, when it overlaps. So here on the 1 minute, you guys can see that we have the London low here. If you go back a few, okay, so like, for example, it's gonna be hard for us to see. Let me see if I go to a clean chart. Sessions. All right. So back to Craig's question. They go back to until the session ends. When the session ends, it refreshes to it refreshes to the previous. So like, for example, right here, here's the London high. You guys can see it's like right there. I'll draw another line there just to show you guys where it is, because it's going to move. So this is where the London high is, right? And then as you move forward and the London session closes, you can see how it changes, right? So it was previously right here because this was the London high from not today, but yesterday, the day before that. And then now that the session is closed, it's moved to this area over here. So short answer to your question, Craig, it goes back to the previous day. And then once that day ends, it creates a new one. So hopefully that, makes sense there. Next question is from Purity. So Purity, we went over, and I'll go over it again real quick. So I'll just go over it one more time, Purity, since we do have time. If you guys have any other questions, feel free to put your questions in the chat. I pretty much answered all of the questions that we have here on mentoring session so far. So if you don't have any questions, there's no more need for this mentoring session, right? So if you guys have any questions regarding any of the strategies, anything really, if you guys need help with whatever with trading, just put your question in the chat so I can help you guys out. But this mentoring session will go on for as long as we have questions. So just a heads up, this is the last question for the day because I don't have any other questions lined up. So if you guys have any questions, you guys are confused with anything, don't be scared, don't be shy. Just put your question in the chat. Like, no one's gonna think you're dumb. I'm pretty sure if you guys have a question, someone else has that same exact question, but they're just too scared to ask. So just type it up in the chat, guys. I'm gonna go over this question for Purity. She wants me to discuss retail sentiment, fundamental bias, technical bias, and how to mark up the chart for sessions and news. And then once that's done, that's pretty much it, guys. So let's see, Rick said Biden is giving Court Pop a gold medal, right? All right, so let me see. Zachary said, I'm still confused as to how the market is up or down. Okay, so that will go over, we'll go over that right now when we go over the retail sentiment, Zachary, unless there's something specific that's like really confusing you, right? Because, so what are you saying right there? DFX. So right here, you can see that it is 59% long, right? IG is, it looks the same to me, Zachary. It's just like 1%, but that doesn't make a huge difference. It's just they update at different times. So what's you might be looking at the wrong number, Zachary. I don't know if you're looking at this number right here. This isn't the number that you're supposed to look at. You're supposed to look at this number right here. And you're supposed to look at this number right here. I'm trying to figure out what you're talking about, Zachary. Actual positive or negative? Like, I'm trying to, like, what are you looking at here, Zachary? I'm trying to figure out, like, because I don't know what you're referring to. Are you talking about this chart right here? This is trading view, and this is on a different time frame. So you're not even supposed to look at this. The whole point of this here, Zachary, is to look at retail sentiment. We're not looking at the charts or anything or any of these other numbers. you're using this as a tool to look at sentiment. So I think you might be confusing yourself because you're looking at stuff that you're not supposed to be looking at. Like if you're looking at this right here, you're not supposed to be looking at this right here because these are on different time frames. This is on the daily, right? This right here, I don't even know what time frame this is on, but this is like by the monthly. So you can see it goes from June to August to October to March. This is like on the monthly chart. So I think you're confusing yourself because you're looking at stuff that you're not supposed to be looking at. The whole point of this is for retail sentiment. Okay, so that's where you like, okay, that's where you totally screwed up too, Zachary. Sorry, I'm not trying to joke around about it. Okay, but you're not looking at IG set. So you said I'm referring to when you say market is up, but then you're asking DFX does it match IG? You're not using IG or DFX for the sentiment. You're using CNBC. So you've totally mixed up two totally different things. This is retail sentiment. This is fundamental. So this is where you're kind of screwing it up because you're looking at the wrong things. For why CNBC? Because it gives you the real-time numbers. Exactly. Sorry, guys. I'm like, my mind's all over the place right now because I don't. So Zachary, I'm literally telling you guys exactly what to look at, but you're looking at completely different things and then asking me why it's not working. It's not working because that's not where you're supposed to be looking. I'm just confused here because I literally tell you guys exactly where to look. But if you're looking at something where you're not supposed to be looking, obviously it's not going to make sense to you because using CNBC because it's real time, like it shows the time it's been updated right here. You know, everything here is, I mean, I've pretty much lined it up for you guys. So let me just break it down for you again, Zachary, so you don't mess this up, okay? So here's the thing over here. Look, retail sentiment, right? Retail sentiment, these are totally different things. Retail sentiment, you're using IG sentiment. You're not using DFX. I never told anybody in my whole lifetime to ever use DFX to look at fundamentals, right? I've never told anybody ever to look at IG sentiment for fundamentals. This is like I don't know like where the confusion came from here, but this is for retail sentiment. This is for fundamentals. CNBC has always been for fundamentals. We've never looked at anything else for fundamentals. This has always been fundamentals here. And you're asking like why CNBC? Because that's what we use. I don't know how else to explain it. You know, I've never told anybody to look anywhere else. So I just want to make sure that there's no confusion here because it's pretty hard to screw it up. I mean, this whole screen here is completely blue, and this is so I just want to make sure. So guys, is there any other confusion here? I want to make sure because this is the first time I've seen this, like where this has been an issue. If this is a really big issue, then I'm doing something wrong here, but I need to figure out, because if this is the problem, then, you know, maybe I have to figure out, because like everything is like pretty straightforward, right? Like retail sentiment, you're looking at one thing, you're looking at IG sentiment. It's always been IG sentiment. It's even in the name sentiment, right? Oh crap, I just messed up this thing. What I do? Okay. So sentiment equals sentiment. Fundamentals equals fundamentals. Technicals equals technicals, right? So here, let me just try to put this over here real quick so that there's, because I'm trying to figure out like, okay, IG sentiment, like it's literally in the name, IG sentiment. For this, it's going to be CNBC, because CNBC gives you real-time data with regard to the fundamentals. Technical bias is chart. Okay, so hopefully this will like, because I'm like confused, like how is this confusing to people? Because if it is, and it's fine if it is, I just want to make sure that like nobody else is confused, right? And I'm glad that you asked this question, Zachary, because I mean, Lila over here is probably confused too, but she didn't ask it in the past. So like now that she's kind of brought it to, you know, our attention, we can kind of see where people are somewhat confused with. But this kind of goes back to what I was just saying earlier, right? the main thing is following directions. If you guys can follow directions, it'll make all the difference with your trading. If you follow the directions and understood that retail sentiment is IG sentiment and not fundamentals, then there would be no confusion, right? Same with the fundamentals over here. If you were to follow the fundamentals, because we always use CNBC as fundamentals, there would be no confusion. There's not even anything here to look at sentiment. So it'd be like literally impossible to get these mixed up because they're two totally different websites. So let me just see if there's anything else here that we were missing. All right, let me see if there's anything else here. Rick said Peter only uses Fox Business. Oh man. Okay, so there's so I just want to confirm, Zach, does that make sense to you now? Like that it's a difference between what you're looking at. The reason you were confused with this is because you weren't looking in the right place. Like we've never used IG sentiment for the fundamentals here. Like this number here is for the daily chart. We're not trading on the daily chart, right? We're trading on the 1 minute. If you're trying to calculate the daily, this is giving you the futures data, which is 24 hours. So this is futures, and this doesn't align with the daily because for this right here, this is going to give you what the market is doing from the New York Stock Exchange open up until close, right? So that's the main reason for CNBC. It's mainly because we want to see what things are happening, how the market's moving in real time. If you want to look at the futures data, then yeah, you can use this, but this will be more aligned with IG. But we don't care what's happening in the past 24 hours, right? We only care what's happening within the past 3 hours because the market just opened like about 3 hours ago. All right, Zachary, no problem. So Zachary's question was answered right there. Let me see what the next question is. Sorry, I totally like missed Purity's question here. So let's go back to Purity's question again. So let's go over here to the chart. Purity's question is to discuss retail sentiment. Retail sentiment is right here, number 1. That's the first step of our confluence. That's going to be the strongest confluence out of the 3. Basically, in order for us to identify what the sentiment is, you're going to look at the retail sentiment, which is going to be right here. You'll see that it's 60% long. So that indicates that there's 60% of retail traders in the market who are buying. If there's 60% of retail traders buying, we want to do the opposite and we're going to sell. So that's how you would identify retail sentiment. You basically want to do the opposite of everyone else. For strong retail sentiment bias, you want it to be 60% or above. Right here at 60%, so it's perfect. Going over to the damn, I missed it. I was looking for a trader here and I just saw it on my MT4. It was a V3. It's all good. It's too small. Anyways, let me just move this over here. Let's move this back over here and we'll continue with our discussion. I'll follow this trade here as well in case I want to enter it for. Oh, actually, no, sorry guys. This is back in time. Oh, never mind. I wouldn't have taken it anyways because it's right at the sessions. All right. So anyways, back to what I was going over here. So retail sentiment, you basically want to look at IG sentiment purity. You want to make sure that it's above 60%. If it's below, it's fine. But for a strong bias, you want to make sure that it's like above 60%. So that's going to be for retail sentiment. For fundamentals over here, you want to confirm that it's either positive 100 points or negative 100 points. You're going to use CNBC for this because it gives you the real-time data. Going over here to CNBC, you're going to refresh this. You want this number to either be in the green 100 points and consistently above it or below 100 points in the red. Right here, it's down 8 points. So it's not very, there's no bias there. It's like right down the middle. So you can't really determine which direction the fundamental bias is going until it actually moves in that direction. So right here, no fundamental bias. In order for it to be valid, it would need to be, or in order for it to be a strong bias, you would need it to be above 100 points or below 100 points. Lastly, with the technical bias over here, you can use different tools. Like I was discussing earlier, if you wanted to mark it up yourself, I mean, you could very well do that. you would just draw your own trend line, right? If you wanted to do that yourself, you can identify the trend as a downtrend. But obviously you wouldn't want to do that because that's too much work. You would have to go over here, or you don't have to, but what I would do is I would use the K2 indicators, right? I pretty much simplify the process. Instead of having to draw my own trend lines, I can look at the trend meter below here. If it's green, this can indicate that it's in a bullish bias. And then also I'll use the pivots here for a first or second confirmation. If price is above the pivots and the pivots are spread out, then this would indicate that price is in an uptrend, right? So that's how you would identify what the technical bias is. You can draw it yourself manually. You can look at the trend meter. You can look at the K2 pivots. You can use whatever tools you like to confirm the bias. I think that the indicators would be your best option because it just takes out the guesswork. But yeah, other than that, that's pretty much all of the confluences right here with regard to retail sentiment, fundamentals, and technicals. Your last part of your question here is asking, how do you mark up the chart for sessions? To mark up the chart for the sessions, you're going to use the K2 sessions indicator. So as you can see right here, there's nothing on the chart, right? In order to mark up the sessions, you got to go over here to the indicators, go to K2 sessions high-low. You add that to your chart. You'll see that it's shaded in right here. To take it off, just go to your settings, turn off background, and there you go. You have your K2 sessions on the chart. That's basically how you would identify where the K2 sessions are. For the other part of your question, you're asking how do we mark up news? So like, for example, today we had news at 7 o'clock, right? So this is news right here. Let me go over here real quick. This candle has closed. This is news. In order to mark up news, you're just going to mark up a horizontal line where the news candle opened. So for example, news happened right here where the candle opened. It opened right there, right? So, and we usually use a pink color. So I'll just change that to pink. I'll delete this, and that's how we draw up news price. The same thing with opening price. Like for example, over here, market opened at 6:30. That's a 6:30 candle. We'll go back over there. In order to draw that up, you're going to draw a horizontal line at the opening price. So whenever price goes down like this, the candle is red, opening price is going to be right here. When price is green, the candle is green, opening price is going to be right there, because that line right there is where price starts. So for example, right here at 6:30, market opens right there. You'll set up a horizontal line, click on the horizontal line tool. I use the magnet. You don't have to use it, but you can use it. It's a lot easier. You just click right there and then it latches on. For opening price, we use a blue color. And there you go. We have sessions, opening price, and news price right there. Pretty simple. So other than that, I think we're done with that question right there, Purity. So I think we're all done with yours. If there's anything else that you want me to go into, just let me know. All right, perfect. No problem, Purity. Hopefully that helps. If you need a review for this, just review the beginning of the mentoring session. And we went over it pretty much in detail again. So if you want to rewatch this later on, you can watch that part and then watch this part and time both together. It should help you understand it a lot better. All right, guys. So let me scroll up real quick and see what else I am missing over here. All right. So iPhone's asking if I can do a mini overview of MT4 basics. I can't, because I can't drag my MT4 to the main screen. I mean, I have to do a whole video on just that. I mean, here guys, like if you guys ever need help with basics or anything like that, you know, your best resource is YouTube. Here's the thing, guys. I can't teach you like the very basic stuff, because a lot of that stuff is like, it's just common sense type things. Like for me, I don't even know how to use MT4 myself that well. I just know how to execute trades, use the DOM, and here, let's just go over here real quick to MT4 basics. I mean, this is your best resource, guys. You go to YouTube, type in MT4 basics, and there's a ton of videos on here. I mean, me personally, I don't have the patience to create one of these videos because I don't like teaching basic things. Like I'll teach you guys stuff that's like useful and related to K2, but like very, very basic stuff like this, like how to use MT4, how do I turn on my computer, stuff like that, jokingly, right? You know, you would just go to YouTube or go to Google and you can like search up stuff like the thing with that I'm just trying to get across, guys, is that you guys have to learn how to be self-efficient, right? I can help you with the more complex stuff like how to trade with K2 and how to apply strategies. But if you guys want to learn very, very basic stuff like this, you know, you go to Google, you go to MT or YouTube, and they'll show you exactly like how to use this stuff. I don't have time to like teach you guys the very bare basic things. If there's a specific question that you guys have regarding MT4, like how to use something, then yeah, I can help you with that. But if you just search up, I mean, there's even a baby pips introduction here, right? And this thing is all like broken down for you too. So this might even be your best option if you really want to see how to use MT4. There's MT4 introduction to MetaTrader 4, how to set orders, right? This stuff's broken down for you guys. Extremely simple. So if you guys want to go learn how to use MT4, I would recommend you go to like, just Google it or go on YouTube because there's a ton of resources here. And I personally don't know how to use all the functions myself, so I can't even explain it to you guys if I wanted to. So yeah, if you guys have any basic questions like that, just use YouTube or go to Baby Pips over here because they have a huge resource bin over here, how to use indicators, right? I don't even use any indicators on MT4, so I don't know how to use any of this stuff. I don't know how to use indicators on MT4, and I don't know how to use EAs either because I've never used them before. The platform is just way too outdated. If you have questions about TradingView, I can show you that. MT4, not so much. All right, so other than that, let me scroll up real quick and see what else I'm missing. We have a question here from Lila. Lila's asking, when sniping, what's the best time to TP? So there's no best time to TP. I mean, you're supposed to go to your TP, right? For your sniping. Lila, I guess you're like wondering when's a good time to pull out early or something like that. I'm trying to like figure out what your question is referring to. Let me see if I can find some snipes here. I think there might be one. Because like, I'm trying to understand like what your question is referring to necessarily. You have to find an entry where it's like actually moving. Market wasn't just really moving, it wasn't really moving too much here, so there's not really many entries to really look at here necessarily. So let's see. You said when sniping, when's the best time to TP? Best time to TP is when the market's actually moving. So if you're trading US 30, I mean, your best time to let it hit TP would be like during New York session, right? When the market's actually moving. Like, I mean, there's no entries today, so I can't see anything here. But I mean, you should always let it hit TP, but you know, the real key is like managing your risks. Like if you're trading during Asia and you see a snipe, you know, you should probably move your stop loss in profit once you're in profit. But let me just scroll down. Maybe you have more details onto your question there. Okay, gotcha. Okay, so yeah, Lila said when to pull out, as you say, the pull out game, right? So the best, so okay, here's red flags again, right? This is what you want to look out for. So say, for example, you're in a snipe entry and say price is getting near the sessions, or it's getting near opening price, or it's getting near news price. At those points, you probably want to move your stop loss in profit or pull out in profit, because when it gets close to those points, the odds are price is probably going to bounce, right? So like, for example, here, say you're in a sell snipe. Let me just find an example. There's no good examples here because there aren't really any entries available. Okay, so I don't think there's a sell snipe here, but I'm just going to use this as an example, right? Okay, so let me go over here real quick. I'm not sure if there's a snipe here, but I'm just going to use this as an example for like, okay, you should probably maybe pull out of your position early. So like, It doesn't work here because the sessions were different. Let me just go back. Okay, so right here, basically, where I have marked up. Not to say that this was an entry because there's obviously no entry here. I'm just using this as an example to show you. So say, for example, you have a snipe entry right here, right? You enter the trade and price is getting really, really close to the sessions right here, right? At that point right there, I would have pulled out in profit. Like price got up to that point and it was getting close to it, I would have just manually closed out. This is where you would probably want to pull out. It's the same place where we have red flags because whenever price gets near these points, this is where price is likely to bounce off of, and it did bounce off right there. Same with this right here. Like say, for example, you're in a sell right here, right? Say, for example, you're in a sell snipe. Not that there was a sell snipe here, but say that you were, or let me go back one candle. Just say that this was an entry. For whatever reason, this was an entry. You have it set up right there like that. And then price pushes down, right? Of course, it would have hit your TP at that point, but say, for example, your TP was farther down, like a little bit below this point. If price got down to this point right here, I would have just manually pulled out. This would probably help with you understanding, when and where to pull out of the position. It's always going to be subjective, but for me personally, that's like the areas where I typically want to go. I want to pull out. Or for example, if you go to the bias, and the bias is no longer a sell. Like say, right, we have a sell bias here where it's 59% long. Say this was like 100 points in the red, and then you're in a sell. Say like you're holding on to this position for like, I don't know, for like hours. And then it starts to change. Like this starts to go in the green like it is right now. And then this over here starts to change from like 59% long to 59% short. At that point, then okay, you should for sure pull out. There's just different scenarios that can happen where you want to pull out of the position. Basically, if the bias starts to shift, or if you're at one of these red flag areas, you definitely want to pull out of the position. So hopefully that helps with that. Yeah, no problem. Glad I could help you with that there. Let me scroll up real quick and see what else I'm missing. All right. So Rami said, what's the dangers of trading in London session and Asia session? I know volatility is a lot lower, but the strats still seem to hit. The main thing is it's pretty much what you just referred to. Right? I mean, it's really the low volatility and wide spread. Because the thing is, if your spread's so wide and your stop loss is really tight, then you would end up getting caught in the trade. Like say, for example, here, the spread is like, and we'll go on the 1 minute. It's easier to see here. Or I'll just go over here real quick. Okay, like, so say, for example, right here, you're in a position, right? And say the spread is 440, which is typically the spread during Asia sometimes. It's like 340, it's like 330 to 440. So say, for example, you're trading during Asia session, which I mean, it's not right here. Let's pull back to, because your spread's super wide during Asia. The strategies do hit, but say, for example, you're entering a trade here. Say you enter a buy at this point, right? It's somewhere over here. So you just enter a buy. There's no entry here, but I'm just going to use this as an example. Say you enter a position for buy right at that point. The spread is like 440, right? You're going to enter the trade up here. So you're going to be negative like 440 pips. By the time you enter the trade at this point, price starts to turn the opposite way. Then you're just in some massive drawdown until it hits your stop loss, right? Maybe this is an exaggeration, but typically there's still at least like maybe 300 pip stop loss, 300 pip spread, right? So this is what you might see sometimes. Sometimes you'll enter this trade and you'll be in the negative. You'll go slightly into profit. And then as soon as you go into profit, you'll go straight to the negative and hit your stop loss, right? That's because the spread's too wide. The thing that you have to keep in mind is that you're paying spread both ways. So say, for example, you're here, or say, for example, you entered earlier, right? Say you entered earlier, like way down here, and your TP was like right here. right? Say your TP was right here. Price technically hit your TP, but you have to cover the spread. So if you didn't cover the spread yet, then you got to reach farther up. And then at that point, price would have reversed and you wouldn't have hit your TP. So hopefully that makes sense, Remy. It's really yeah, Remy said that's literally happened to me before. It hit TP on TradingView, but it hasn't taken into account how big the spread was on MT4, which is 100% why I don't trade Asia, because I've gotten burned like this before where I'm like, dude, what the heck? You know, you're like, it's way past my TP. Like say, for example, your TP is right here and you're like, bro, what the hell? Like it's like way up here, but it still hasn't closed you out. The reason it hasn't closed you out is because it hasn't covered the spread. So that's the main reason why I wouldn't trade during Asia session. I do trade sometimes. So, you know, sometimes I'll compensate for that. Like, for example, instead of going for 100 pips, I'll go for maybe 50 pips. So at that point, it'll like maybe hit my TP before it actually turns the opposite way. So that's the main reason why I don't trade during Asia. For London, I would trade during London, but I'm asleep during that time. So, but if you do want to trade during London, I recommend trading after 2 hours after open, because you're going to get the same mid-market reversal that you see, like the same breakout and same mid-market reversal movement we get during New York session. It's just during London. So you get the same movements. It's just a lot of uncertainty during those periods as well. Yeah, exactly. Rami said, yeah, first 2 hours are choppy. Yeah, I agree. All right, so other than that, I think that's it for your question right there, Rami. Let me scroll up real quick and see what we've got next. Pat's asking, does a sell V3 have to be on a higher high green candle, or can it be on lower high? It could be on any high, Pat. So it doesn't have to be a higher high. It could be, like you mentioned, a lower high, like this right here. I'm trying to see if I can find an example here. Okay, so like this one right here. Where was it at? Okay, right here. So, you know, again, right here, this is a lower high. This is still perfectly fine V3. It's not a good V3 because it doesn't fit the requirements for the stop loss. I remember this during the live, but say, for example, if it was at least, you know, 300 pips, just using that as an example, if it was, then this would be perfectly fine. And it does hit TP right there. So it doesn't have to be a higher high. It just needs to be any high or any low. Yeah, exactly. And then same with your other question there for vice versa, same thing as well. Just needs to be a high or a low. It doesn't need to be a higher high or a lower low. Yeah, and CT said, I think it's actually better with a lower high on short since structure is indicating a downwards movement. Up to you though. Yeah, and I agree with CT as well. All right, so scrolling up real quick. Let me see if there's anything else missing over here. Thanks, guys, for breaking down the difference between CNBC and sentiment earlier. I'm just going down the chat to make sure I'm not missing it for anything here. So let's see. Zachary said if you're using. Purity's asking, how do I find my trading history profits on my MT4, my laptop? I can do it on my phone, but I can't find it on laptop. Oh, thanks, Pat, for confirming that. Another question from Solo here. Solo is asking, hey, with the triple confluence strategy, what take profit and stop loss do you recommend for the 5-minute and 10-minute time frame? So I don't use it myself on those time frames, but I would assume for the 5-minute, it'd probably be 250 to 50 to 250 to 500. I mean, I don't know. Let me see if I can find one over here. You don't really see them happen too often on the 5 or the 10. So I don't really have a grasp on, like, you know, what's the movement like. The thing with those high-low, with those triple confluence entries are that you're just going for the quick move. I'm gonna look here on the 5 real quick and see if I can find one. Maybe we can gauge what the what it should be. Yeah, I don't know if do you see if you see anyone Solo, like if you could point it out. I don't see anything here. I'll try to go back as far as I can, but I don't think it doesn't really happen very often on the 5-minute. because this is like a 1 minute strategy. Like you don't get the momentum signals come up as often. All right, so we come back one day. Let me see if I can find something here. And typically, if you get something like that on the 5 minute, it's going to be like a huge candle. So even if you got that huge candle, you would have to, okay, I think there's one right here. So this doesn't happen very often, but looks like there's one right here. Perfect. So on the 5 minute, I would probably use a 250 to 500, or maybe you can do a 1-to-1 risk reward. It just really depends on your risk parameters, right? This is something that you would have to go and back test to see what works best. The only reason we have a wider stop loss on the 1 minute is because the 1 minute is so volatile that you don't want it to hit your stop loss before you hit your TP. So, I mean, you can technically use 25-50, or you can use 50-50 in some instances. So if you use 50-50 here, I mean, it still would have hit your TP. You can see it rarely comes up though. Like this doesn't happen too often. So I would personally use between a 50-50 or a 250. It just depends on like how confident you feel, right? If you're trading during New York session, then maybe go for the 50-50 because you have high volatility. If you're trading during London or even Asia session, I would probably go for lower TP because it just really depends on the volatility in the market. If the market's moving quickly, then then yeah, you can use something higher. However, you're probably not going to see it very often. So here's one entry here. I'm going to see if I could find one more before I move on. Like this one right here. This one's probably one that I don't know if I would take because it was like right at open or like near the open. So there's another one right here. But it was like at 7 o'clock. I don't know. There's probably news on this day, right? Yeah, yesterday at 3. Or not 3, but 7. Yeah, there was news right there. It was high impact. So you wouldn't even have taken that trade right there. This one was like right at news. This is the news candle actually. Other than that, I don't see anything else here. So I would play around with it. For the 10 minute, I would do the same thing. I would probably use 50-50, depending on when you're trading. But for the 5, maybe 250-50. Seems like it's pretty solid off that. Let's see. Pat's asking if the triple confluence is in the trading modules. I don't think it's in there yet because it's one of the newer strategies. A lot of these strategies that we apply on live, they're like somewhat newer strategies that we've been working on. So let me check real quick if they're on there. They might be. See. Yeah, the rules are they're pinned in the group. I'll post another update for like all of the new updated strategies. I'll probably post that and then pin it on there later. But I don't see it on the course right now. I mean, so here's the thing with the triple confluence. The problem with me creating a strategy for that or creating an actual video is that I have to make a lot of videos because the triple confluence just means that there's 3 different strategies that align with one candle here. So for this candle right here, this is technically an intraday entry. It's also a high-low scalp. And then it's also a pivot scalp entry. So the thing is you can mix and match. You can have a variation with an intraday with a pivot, or you can have a pivot with a variation in V3. It's just 3 different strategies lining up with like one candle. So it basically makes it like a super entry because there's 3 different strategies that are high probability and they all hit, right? Because all the strategies that we apply here have very high probability. So if you line it up with 3 already high probability strategies and they all line up on one candle, odds are it's probably going to hit. Yeah, no, definitely, Pat. That's why I haven't created a video for it, because it's kind of hard to create just one video, because I mean, the main one that we use is this one, which is, confirm momentum signal, confirm the trend meter. Realistically, this is an intraday entry, because in order for you to have an intraday entry, you just match momentum with trend meter, right? And then you have a win right there. Same with this, like you have those lined up, and then you also line up pivots and the high low. So if you line all three of those up, it's basically three different strategies. These two requirements are for one strategy. This is for one strategy. And then this is also for one strategy as well. So yeah, no problem, Pat. I know it's kind of confusing. I'll try to make more videos on that later. But yeah, eventually I'll make, like, hopefully by the end of this month. I've created almost half of the videos already. I've produced them already. It's just getting them remastered and uploaded to the internet, which is going to be the biggest hassle for me, because I haven't made videos in a long time, so I'm not really familiar with the video editing software on this new Mac. So I'll try to get that out to you guys by the end of this month. I know I told you guys last month, but it's really just me figuring out how to use the video editing software that I haven't used before. All right. Other than that, let me see if there's anything else here. I think, let me scroll up real quick and see what else I'm missing here. Scrolling down. So I think we're done with that right there with Solo's question. Hanny's asking, can you summarize the points you use to enter a trade after market is open? So Hanny, are you referring to the breakout strategy? I think that's what you might be referring to, right? Okay, perfect. Yeah, no, so that's kind of what I assumed. So anyways, we'll go back to yesterday's market, because there was no breakout today. The breakout that came up today wasn't aligned with our requirements. We'll go to the one yesterday, because the one from yesterday was actually it lined up. So I'm going to clean up the chart here. I'm going to take everything off the chart except for these sessions. So yesterday was the 3rd. Let's go over here real quick. All right, so market opened over here at 6:30. All right, so this is the opening candle right here. I'll put the requirements here for the breakout, honey. So for this strategy here, basically you're looking for an entry after, or as soon as the market opens at 6:30. So 6:30 is right here. This is the opening candle. You can start looking for entries at this point. For the first real requirement here, you want to confirm the bias. I can't remember what the bias was. I'm pretty sure it was a buy, right? It was bullish. So let me go back over here. I'm just going to go back up to the actual entry candle. So scroll this over here. Okay, so for the first requirement, you want to confirm the retail sentiment. I can't remember what it was, but we're going to assume it was bullish. Next, you want to confirm the direction of momentum. So in order to do that, you're just going to look back at the most recent momentum signal. Right here is a bullish momentum signal indicating that we're looking for buys here. So with that said, we're only looking for buys at this moment, right? Because there's no sell signal. There's only a green buy signal right here. So momentum's pointing towards the upside. And in this situation, you're only looking for buys. For the fourth requirement, you want to confirm a strong candle in the direction of momentum. So since we're looking for a buy here, we're looking for a strong green candle, not a strong red candle, because we're looking for a direction to the upside. Right here was a red candle, no confirmation of a strong green candle there, same as here. This is going to be considered a strong green candle. The reason why it's a strong green candle is because it is a green candle with little to no wick on the top side. So it's not really hitting any resistance here, indicating that price may, swing back down. Typically, if there's like a big wick on top, like something like this right here, price tends to come down a little bit, right? Same with a wick on the bottom, price tends to go up from there. So with that said, we have requirements 1 through 4 met. And the next step here is to enter on the open of the falling candle. So like, for example, right here, we have all the requirements met. We enter right here for a long position. We set our TP stop loss to 500 pips. It's a fixed TP stop loss. And once you let it run, there it goes into profit, pushes up higher, full TP right there. And that's how the breakout is applied. So Honey said, but if I use the second candle, which is red for momentum. So I think you're confusing momentum with a strong candle. Strong candle and momentum aren't the same thing. A momentum candle is using the K2 momentum indicator. I don't think you have the indicators, so I'm not sure if you're familiar with it, but that's how we identify momentum. Because it says right here, confirm direction of momentum using K2 momentum indicator. You're not using momentum by looking at the candles. You're using that as the fourth requirement. The requirement for momentum is using the K2 momentum indicator. There's no sell momentum here, so you wouldn't be looking for a sell, if that makes sense, Hani. I'll go to another example over here. I think there was an example on Friday, I believe. So that was an example of a buy. Let me show you an example of a sell. Because last week it was like majority sells. Where was it? Okay, so let's go back to Friday. Okay, so I think where your confusion is that you're not identifying momentum using the K2 momentum indicator like it's supposed to. So again, right here, breakout, right? First requirement, look for entry after 6:30 a.m. It's 6:30 a.m. right here. We're going to start looking for some entries. We're going to confirm the bias. Last Friday, if you want to watch the replay, I think you were here, Honey. If not, the bias was a sell. I remember because fundamentals were red, technicals were red, retail sentiment was red, everything was red. So basically right here, we confirm the bias. We're going to assume that it's bearish, only because we remember from last week that it was. And then from here, you're going to, actually, this isn't from last week. This is from Monday. If I remember correctly, this is from Monday, actually. So Monday, our bias was a sell overall. And now that you have the confirmation here, the third requirement, this is where your confusion lies. It's regarding the momentum, right? So earlier you said, oh, I can use the second candle as red momentum. You can't, because that's not what you're looking for. You're looking for these vertical lines here that indicate where momentum is swinging. This is a bullish momentum. This is a bearish momentum, right? Since we have a bearish momentum, we're only looking for sells here. You can't just say, oh, I'm going to take a buy because this is a strong green candle. That doesn't work that way because that's not how the requirements are applied. Right here, you're looking for a sell. It doesn't matter if you get a strong green candle or not. It will indicate that, that's not the requirement there. So this example right here, here is the, this is, I don't know if we consider that a strong red candle. That wouldn't be a strong red candle. So right here, open, we look for the momentum. Right here, it's a weak red candle, big wick on bottom right here as well. We continue moving along. And here is the strong red candle that we were looking for. Or actually, I don't know if that was a strong red candle. Let me see, because I think this does retrace up. Or actually it was. And there you go, hits full TP. So I think what happened here was on Monday, we didn't actually enter on this. We entered on this one right here. Because we said that this candle was too big. We waited for it to retrace up a little bit, which you can see right here. If I turn off the pivots, you can see that there is a big wick right here, right? Because price does retrace. So I think what happened here, if I remember from Monday, is we didn't enter immediately. We waited for it to pull back a little bit, and then we entered right here, and then we caught it for the full TP. That's pretty much where I locked in that huge profit from Monday, May 2nd. Yeah, right here, I locked in about like 3,800 on that day. And you can see it's red because we took the sell there. About 3,000 there, and then about 4,000 there. So yeah, no problem. Honey, glad I could explain that for you and clear up any confusion. So that's it with Honey's question right there. Let me scroll up real quick and see what else I missed. Scotty said on TradingView, when I bring up the session on my screen, bunches, how can I have them up with full screen? So sometimes what happens is you might have messed with your settings on accident, Scotty. What you can do is just click this right here, go to new chart layout, and it'll give you a fresh new chart. So this is what it'll look like. You'll have to like pretty much do everything over again, but it'll give you a clean chart with no like issues on the chart. So you just delete all the stuff you're not using, turn on the sessions indicator, and then it'll look normal again like that. One thing that you can do as well is you can also click auto right here. This might fix it because sometimes you mess with it sometimes like this, and I see people mess with it all the time. They accidentally like scroll out and it comes out all weird like that. If you click auto, this might fix it. But there's been some instances where your chart gets corrupted, and it's happened to me before, where I have like whenever I'm on my laptop, it happens to me a lot because my screen's so small compared to my huge screen here in my office, that when you click auto, it doesn't fix it. So like your last thing that you can do is just create a new chart, and then it'll just reset everything. But try clicking auto first, that might fix it. So let me scroll down further. I think we have one last question from Kodi, and I think that's pretty much it. Hani said, so we have to wait till it shows red momentum. You don't have to wait for anything because you're going to look back. So let me go back to the breakout again. So again, with the entry, like you're not waiting for anything because you're not trading off the momentum indicator. You're just looking to see where momentum is going. So for example, again, right here on the, okay. So again, for this entry over here, you're not waiting for momentum. You're looking back. So it says to confirm the direction of momentum. If this candle here is your entry, you're looking back to see where momentum is. You're not waiting for the entry isn't taken off the momentum. You're just looking back to see where momentum's going. If it's green here, momentum's going up. If I go rewind over here and it's red here, then momentum's going down. Vice versa. You go over here again. It doesn't matter where you are on the chart. You look back, momentum's green. You're looking for a buy there. You go back over here. You look back at the momentum here. It's green. Then you're looking for a buy here as well. So you're not looking for you're not waiting for anything. You're waiting for the requirements to be met, but your momentum indicator doesn't really, you're not waiting for that. It's already on the chart because once it's on the chart, it doesn't disappear. It stays on there. All right, so last question. Hani said, but it switched sometimes at opening. Well, yeah. So the thing is, if it switches on opening, then you're going to be basing it off that actual candle, right? So I can't show you here because it's not real time. Well, I mean, it is real time, but it's not, run on open. Like for example, right here, sometimes you'll see price come here and it's not closed yet, right? So if it's not closed, then there's no requirement there. This goes back to like what I was saying in the beginning, right? You just have to follow the requirements because, so here for the breakout, if everything here is met, but you're looking for the momentum, then it's not met yet, right? Not everything here is met. So what you have to look out for is, and this is something that you would have to go back and watch the previous live sessions, because I do explain there what we're looking for. Like say, for example, here, not that it's happening, but say this is the breakout right here. And then this is the opening candle, and you see that you have a pending momentum, right? If that momentum closes, then yes, the requirements are met in the opposite direction. So what you have to do is you just have to understand what the requirements are, right? If you understand what the requirements are, you'll know what to look out for. I can kind of get what, well, I 100% do get what you're trying to ask for here, but I can't show you it here when we're not on the live, right? It needs to be happening real time, and you'd have a pending momentum. So it doesn't matter if you're waiting for it to show red or if you're waiting for it to show green. If it's showing already that it's green, then you're going to take the trade. If it's not showing that it's green or it's not showing that it's red, it doesn't change your analysis, right? Because whatever appears on that candle, these requirements here still have to be met. Right, honey? So I think the issue is that you don't have the indicators. So if you have the indicators, this is something that you could practice. But if you don't, which I don't think you do, you wouldn't be able to practice it. You have to watch it from the live. So what you would have to go back is to review the previous live sessions. And I'll explain in all those sessions. Like, I think the best time you should probably look would be for the past 2 weeks, because the past 2 weeks, I think the breakout hasn't lost, right? It hasn't lost in like, as long as all the requirements are met, you can see that they haven't lost. And then we'll have scenarios there, which is what you're looking for, where there's situations where you're looking for a buy, and then all of a sudden a sell signal comes up. And that's, I'm pretty sure that's what you're trying to get at. So if you want to go look at that, honey, just go to the YouTube channel. Let me pull it up for you real quick. Just go to the YouTube channel over here, and then go to videos, and pretty much any of these with the blue background. So anything with the live trading for like the past 2 weeks, just watch like the first 5 minutes of the breakout, and then identify how I analyze the market for the breakout, because it does move really fast. So you just have to understand like exactly how it's moving, and you know, if and when your bias would change due to the momentum signal that does come up. So yeah, no problem. Yeah, no problem, honey. Honey said, thank you, Sean. Hey, you're a good trainer too. Yeah, no, definitely. I just want to make sure that I try to make it as clear as possible, because, you know, I know it's confusing initially, but once you apply it enough times, it'll make a lot of sense. So other than that, we have one more question from Kodi. Kodi's asking, hello, happy that I catch part of the mentoring session. If you have time, Sean, can you show good pivot scalp? Also, do we need to add the rule which you mentioned once in your mentoring session, body to not be on the pivots? So I think you're mixing up the strategies, Kodi. That the body where it doesn't touch the pivots, that's the snipe strategy. So that's different from the pivot scalp. Here's a snipe strategy, and this is the requirement that you're referring to. Confirm wick rejection off pivot does not touch the candle body. For the pivot scalp, that's not one of the requirements. So it's really simple. You're just looking for momentum in the direction of the pivots, and then you just want to make sure that it's below or above the pivots, and then you just enter from there. So let me see if I could find an example over here, because you're just looking for pivots 3 and 4. So I'll just turn these off right here. Here we have an example. It's like clearly on the chart already so far. So I think that's where you might have been confused, Kodi. Those are like 2 different strategies where you don't wait for it to touch the body. But let me just delete this here. And then I'll go back to this candle here, because this is an actual entry. Okay, so looking at the requirements here, confirm a valid K2 momentum signal. We have that right here, right? You want to confirm price is below the K2 pivots 3 and 4 for a sell, or above for a buy. It's above the pivots right here. Everything lines up. You take this for a long position right here. You let it run for 100 pips or so. It's just a quick little scalp. You let it run, and there you go, full TP. Same with this one right here. So that's one right there. And then here is another example over here. This is, you know, one thing that I have to add to the requirements here is the bias. because that's a requirement that we use for every strategy now. So I'm going to have to add that to the requirements here. I know we don't have it on here yet. I'll just do that right now, actually, because that'll help us stay aligned with KT 1 minute pivot scalp. All right. Okay, so we're just going to assume that it's bullish here. Not that it was, but we're just going to assume that it was. Let me try out the sessions. We're just using this as an example here. So again, right here, another entry for a pivot scalp, buy signal of the pivots. Trend meter is not required, but it's helpful to identify things. So right here, it'll confirm that it's probably going to be bullish. You let that run, and then again right there, full TP. Here's another better example because this is from this morning. Since we did have a sell bias, because we do remember the bias from this morning. Same thing again right here. Pivot scalp entry, confirm the overall bias, which was a sell, confirm there's a momentum signal for a sell here, confirm that it's below the pivots. And that's about it. You enter here again for a sell. You let that run, 1030. And full TP. So pretty simple. I mean, it's pretty straightforward. There's not really much guesswork here. There's another one right there, full TP. Another one right there, full TP. It's like 3 back-to-back. 1, 2, 3, 4, 5. There's like about like 6 or 7 full TPs for these pivot scalp entries that came up over here, as long as you trade in the direction of, you know, the bias. So I think that's about it. Yeah, no problem, Tony. So I think that's it, guys. If you guys have any other questions, you know, feel free to put them in the chat right now. Otherwise, I think we're going to wrap up this this mentoring session. We've been on for approximately about 2 hours now. So I think everyone's questions were answered. If you guys didn't have your questions answered, just keep in mind that we have this weekly. So this week we had it earlier to accommodate for solo, because solo is like on the opposite time zone of what we're on here in the US. So, you know, if you guys need any accommodation, just let me know, and I'll try to, you know, I'll try to make time for you guys, because, you know, my main goal here is to help you guys out and make sure that you guys get all this stuff down. Like, you guys see how successful everyone in K2 is, right? Like literally over here, literally everyone over here is kind of like Charles over here, right? Charles locked in 1,500 off this account. And then his other account over here, he locked in 796. And then his other account over here locked in a total of 1,500. So you guys see here that there's people that are killing it every single day. You know, these are my trades, obviously. Patrick, you know, if you see all these people here killing it and doing very well, there's no reason for you guys not to be doing very well as well, right? The only problem is that you probably just aren't getting it as well as everybody else. So, you know, as long as you guys grind it out, you actually put in the work and learn the stuff. This is all like, everybody's different. There hasn't been a whole day. I mean, like, there hasn't been one day where profits weren't made by, you know, members in K2. Like, for example, if we wanted to go back and you guys gave me a random day, right? If we went back to like, okay, October 13th, right? There's profits that were made that day. There hasn't been one day for an entire year where members have not made profits, right? And I record the videos. We have actual videos of everyone's profits. You can give me any random day, you know, July 22nd. We scroll down, we have the video of everyone's profits for that day. So guys, you know, what I'm just trying to show you guys here is that it's possible, right? It's possible to be successful trading K2. It's just really you guys understanding the concepts and applying it properly. So other than that, guys, I think that is about it for now. Yeah, CT said get ready for a whip at 11 o'clock because the Fed is going to be speaking in about an hour. So other than that, guys, have a great rest of your day. If you guys have any other questions, feel free to email me or message me on Telegram. Otherwise, we'll be back here for the next live session tomorrow morning, and then we'll schedule the next mentoring session for the following week, probably towards the end of this week. So other than that, guys, have a great rest of your day, and I will see you guys tomorrow.